All right, what is up, traders? What's up, tycoons? Super excited for today's video. Today's video is the second video in the series going over different bond ETFs and taking a look at the performance relative to the Fed fund rate. Now, why am I creating this series and why am I looking at these different bond ETFs and the Fed fund rate? Well, the reason being is because the Fed is very near to officially be done with raising interest rates and raising the Fed fund rate. Now, it's unclear whether or not they're going to do one more Fed fund rate hike, or if they've officially come to a real pause and they're not going to, raise them anymore. And you can see in today's video, we'll go over how the bond market typically bottoms before the Fed starts to cut interest rates and cut the Fed funds rate. So that is going to be really something that's going to be coming within the next year. Okay. The Fed most likely is not going to cut rates until the latter half of 2024. Okay, in the third quarter or fourth quarter, and it may take even longer. Okay, but we want to prepare ourselves for that environment and want to look at some of the different opportunities present and available to us. So we're going to take a look at IEI today. This is going to be your 3 to 7 year bond ETF. All right. And we're going to compare that. All right. And go over the performance against the 5-year treasury, because again, this is a 3 to 7. So we're just going to take a look at how it performs relative to the 5 year. So that way you guys understand how bonds work and how the price action works. All right, and we'll zoom in so you guys can see that a little bit clearer too as well. And then we're going to show IEI versus TLT versus the Fed fund rate, as well as IEI versus the Fed fund rate. So you guys can see, how it performs relative to the Fed fund rate and why it's something that I think, a lot of people should be paying attention to right now. And you can decide whether something like IEI or something like EDV or something like TLT, which are the 3 bond ETFs we're going over in this series, why potentially you may want to get into one of those, and you can, look into which ones are going to be right for you. Now, as always, the content provided on this channel is for informational and educational purposes, and it's not intended to be relied upon as legal, financial, or investment advice. So, be sure to read through the full disclaimer, and we'll go ahead and get right into it. So we have our 3 to 7 year bond ETF. All right, that's what the IEI is. Gives you exposure to intermediate term U.S. Treasury bonds, and you can take a look at some of the portfolio characteristics as well as the key facts, of the ETF right here. And if you take a look, it's got a 0.15% expense ratio. Okay, these are some different things that you want to look into and kind of understand. The number of holding, it's got 69 in there. That's pretty funny. I'm not sure if that's a joke or if they did that on purpose. But it is a funny coincidence, right? 69 holdings. You can see the 30D SEC yield is around 4.45%. All right. And go over again the portfolio characteristics and key facts. Right now, what we're going to do here is show you guys IEI in red. Okay. And the 5-year treasury yield in black. So what I basically want to highlight to you guys is, as yields go up, right? So yields are going up here. Bonds are going to go down, right? That's how they work. Okay. They're not something that reports earnings. It's not like a stock. And, if it reports earnings and earnings are good, the stock can go up, or if earnings are bad, the stock can go down. Bonds move based off of the treasury yields. And so you're going to want to pay attention to the relative yields, all right, that are related to the bond ETF that you're tracking, which is why we're looking at a 5-year here, right? The IEI covers the 3 to 7, right? The 5 years right in the middle of that, and hence why we're looking at the 5-year. Now, when treasury yields go down, okay, and the 5-year yield is going down here, you can see that IEI is going up. Right. And it's a very simple concept to understand. This is basically the main concept that you really want to understand, when it comes to bonds and, some of the basics when it comes to bonds. Now, you can see this a little bit more, when you zoom in, right? You can see the 5-year treasury yield in black is in an uptrend and IEI is in a downtrend here, right? Down about 2%. Okay. Slowly making lower highs and lower lows, while this one is slowly making higher highs and higher lows. All right. Now, when you take a look at IEI versus the Fed fund rate, all right? The Fed fund rate is going to be in black. And these flat periods here are where it's paused. So as I mentioned before, you can see that when they paused, the bond market actually bottoms ahead of that, okay? And the reason being is because they're anticipating a cut in the Fed fund rate in the future because the Fed has paused, and that is why oftentimes you see the bond market bottom before the cuts start to come in. Now, throughout this period, you can see that IEI is doing a nice job of rallying, and it goes up about 28% from this, 2008-ish area where we start cutting rates until to about 2016 when the Fed fund rate starts to go back up again, okay? And in this time period where the Fed fund rate is going up, all right, IEI dropped down about 7%. Okay, and then what do we see? We get the pause right here again. All right, and you can see, all right, bottoming before the Fed start cutting rates, right? Before the Fed fund rate starts going down, we can see that the bond market bottoms and IEI bottoms ahead of that. Okay, and you have this period here where rates went down and IEI rallied about 13%. And then, of course, we have the historic rapid pace and rapid acceleration of the Fed fund rate. And you can see how IEI has only gone down about 16% from its 2020 highs, okay, from the 2020 highs over here. So, when you compare this to something like TLT that dropped a lot more, okay, from its highs to its lows, it had a much more significant drop. That's one reason why someone may consider IEI, right? If things go against you, the maximum drawdown, all right, typically will not be as great as something you'll experience in something like TLT. Okay, and a really great example of this is going to be on the next chart. So take a look here when, TLT tops out, all right, IEI tops out over here. Well, TLT actually goes down a whopping 44%. So versus the 16% that IEI went down. Now, that works on the flip side as well. So what I mean by that is in this period here, where essentially IEI rallied about 28%, okay? TLT ended up going up about 63%, okay? And then you have, the drawdown, again, the max drawdown is much greater, right, in TLT. So TLT drops about 20% in this time period here as the Fed fund rate is going up, and IEI drops only about 7%. So, based on the type of conditions, and if the conditions are favorable to your position, right, whether it's a long or short position, these are some of the considerations that you want to have when looking at IEI or TLT, right? TLT experiences a lot more pain whenever the Fed fund rate starts to go up, right? Relative to IEI, but IEI does not outperform. Rather, TLT outperforms IEI in that positive environment where bonds are actually going up. So that's the main thing really that I wanted to point out in today's video. I do want to highlight that I started a completely free newsletter. So if you're new to the channel and you haven't subscribed to the Investment Intelligence newsletter, there's a link in the description. It's free, valuable finance content. And I also try to sprinkle in some trade ideas, right? So this is a trade idea on Tesla from a few weeks ago, almost a month now. And you can see that it played out very nicely, especially if you trade options, you were able to lock in some really massive profits. We talked about ExxonMobil. Energy is something that I was bullish on for a long time. We go over some of the conditions, such as the RSI and the MACD right here, what we were looking for. And you can see we got the RSI breakout. We got the MACD crossover right here, the bullish MACD crossover, and price went from 111 up to 117. All right, now they're not all just long positions. We do have short trade ideas in here as well. You can see the rising wedge on SWK. This is Stanley Black & Decker. Okay, and we're looking, and basically our projection of where we thought the stock was going to go. And you can see that it played out perfectly and went down and hit those conditions. This was a little bit over a month ago. So if you're a fan of free, valuable content, all right, and you enjoy free trade ideas as well, definitely sign up for that newsletter. Okay, the link is in the description as well as the comment section down below. And I do want to mention as well that I started a Ko-Fi page. Ko-Fi is going to be what I'm using now for you guys to book all of the one-on-one sessions. All right, I do these one-on-one sessions every single week. You can click on the commissions page right here. And you can now book a 30-minute or 1-hour session directly through the Ko-Fi platform. And then we can work on scheduling a time that fits both of our schedules. And in here, you can also request a specific YouTube video now, right? So again, if you click on the commissions, you can come in here, request a specific YouTube video on the topic of your choice, whether you guys want me to do a strategy, a tutorial, you want some fundamental analysis, you want some technical analysis. Ko-Fi is going to be the platform now to directly reach me and request those. As the channel is growing and getting a little bit bigger, it's very hard to keep track of all of the YouTube comments and, you know, every comment that people are requesting. And if you enjoy the free valuable content that I do put out, you can always come here and click on the buy a coffee button. Okay, and you can make a one-time donation. Okay, it's basically a way to give a tip or donation, you know, as a thank you for some of the free work that I put out here on YouTube and via the newsletter and other resources as well. So thank you guys for watching the video. Smash that like button and subscribe to the channel for more.